So I came across this video by Richard Murphy, who's a professor of accounting practices at Sheffield University Management School. He did a video called "People Are Claiming Bitcoin is the New Gold." It isn't, and he released this video explaining why he thinks it isn't. And I was left very frustrated by the video because it's clear to me that Richard doesn't actually know anything about what Bitcoin is. And through his delivery of proving why Bitcoin isn't the new gold, I was left frustrated, and the things that he said left me worried that people would believe him and disregard the benefits of Bitcoin. And I thought it's only right that I put my view out there and discredit a lot of what he says and see where we end up with it. So ride along with me and spare me your time to lend me your ear to see if we can actually unpack and pull apart and prove that he doesn't actually understand what he's talking about here.
Is Bitcoin the new gold? The fans of Bitcoin are saying it is. They are saying the moment for cryptocurrencies has arrived, and of course they associate that with the elevation of Donald Trump to the post of US president for the second time.
Now, I don't know why he's done that. I don't know why he's brought Donald Trump into this. If you follow finance and economies, or whether you don't, what's actually recently happened is that Donald Trump, during his presidential campaign, made a sort of campaign promise that he will put Bitcoin on the strategic reserve balance sheet of the United States of America. And that caused a lot of activity and discussion within the Bitcoin ecosystem amongst people that understand what Bitcoin is and the value that it holds and the benefits it has for society now and into the future, and a lot of the problems it resolves that we currently have in our economic structures at the moment. And just saying that Bitcoiners are just sort of, it feels to me like he's associating Bitcoin enthusiasts with Trump fans, and that's disingenuous and not correct. Bitcoin is a decentralized global protocol that anyone anywhere in the world can opt in to use, and it's not American, it's not tied down to any nation, it's not a company, it's a protocol that is out there that anyone can participate in and get involved with within the ecosystem to sort of participate in peer-to-peer interactions and transactions together. So the reason why he's put that there signals to me that he's signaling in a very subtle way that it's all about sort of pumping our bags and getting behind Trump, and that's not right.
Are they right? I hope not. Why? Because gold was disastrous for the world economy.
Right, okay, let's just get into a little bit then, I suppose, about gold. Why is gold used here, and why do people sort of generally hear the term Bitcoin is digital gold? Well, it's a way to try to signal and get people to conceptualize what Bitcoin is to a degree, right? Because Bitcoin does have many of the elements of what makes up gold and why gold is valuable. It's improved upon those elements, and it's got some additional ones that overcome the issues that gold has had throughout civilization, many thousands of years. Many societies and civilizations that have been built and fallen are a result of not gold, but the misuse of gold by people in power abusing the supply of gold and creating situations where civilizations fall because of the manipulation of that gold and the amount of amount that they put out in circulation versus the amount they keep for themselves. So gold wasn't disastrous. It was the misuse of gold that caused the disasters. And the elements that gold has, it's scarce, it's very rare, is that you come across it. Yes, they're finding more gold over time, but at a very slow rate, okay, like 2% a year additional gold throughout the entire world economy. So it's sort of relatively scarce. It doesn't change its compound structure over time. You can melt it down, it will still be gold, and it doesn't lose its integrity in any way when it sort of cools down and becomes solid again. You can verify it easily. You can do simple tests to know that it's gold. You can store it long term, it doesn't degrade in any way. And these are all elements of gold that have been recognized by civilizations over time. And Bitcoin is scarce. It's capped at 21 million, and that's the cap. You can't produce any more than 21 million. So it's more scarce than gold, and it's programmed into the protocol, and it's just running automatically. TikTok and the protocol is just running to the point of 2148 or thereabouts, year 2148, when the last fraction of a Bitcoin will ever come into existence. And that's the complete supply of Bitcoin, and that's all we have. Whereas gold is, like I said, being found all the time. It's portable. I can transfer Bitcoin from my mobile device or my laptop or whatever, even through, texting a code on an SMS nowadays. I can transfer that Bitcoin anywhere in the world to anybody who's got a Bitcoin wallet. And, I can do that instantly. Whereas gold, you have to load it onto a ship and trust that ship doesn't sink, and people are there sort of looking after it and making sure they don't steal it and stuff like that. It's divisible. You can cut bits of gold, a gold bar up into bits, so you can divide it up and it's still gold. And the same with Bitcoin. One Bitcoin is 100 million satoshis. So the satoshis are the divisible parts of a whole Bitcoin, and there's 100 million satoshis in every one Bitcoin. So it's divisible in that sense. You can easily verify it because you've got these nodes distributed across the globe. It's running on the protocol that is Bitcoin, and every transaction is backed up on a ledger. And every transaction ever since the protocol started back in 2009 is there for everyone to see, and every transaction that's ever existed and ever been done on Bitcoin is shared amongst and distributed amongst all of the nodes, and it's verified instantly and automatically by the protocol. You can store it. If you put gold bars inside a massive vault, you need security, CCTV, blah blah blah. But with Bitcoin, you can just put it on a little USB device or small device in cold storage. As long as you've got the seed phrase and the private key codes to that device, that's your Bitcoin, and you can store it on a little bit of a basic USB stick, and it's secured easily and cheaply in that way. It's borderless. I can walk across the border with a password in my head, and technically I'm bringing my Bitcoin with me anywhere I go. Whereas gold, if you cross a border with it, you're going to be asked lots of questions and you're risking quite a lot, maybe your liberty in some places as well. And I know it's secure because it's cryptographically coded into the protocol, and nobody can sort of tamper with that. It is what it is. You have to participate in the protocol. You can't sort of decide upon yourself that I'm going to tweak the numbers here, because all the nodes that are verifying what you're doing will just reject you straight away. So you can't participate in dodginess, because the protocol will humble you and kick you out. And it's rules without rulers. Okay, so I can't, even if I had 20 million Bitcoin, for example. That's excessive, but because it's only going to be 21 million. But if I had, like, I don't know, a million Bitcoin, I've got no power over the network, no more power over the network than anyone else. Just because I've got more wealth doesn't mean I've got more say. I have to participate in the same way as everyone else does, even if they got one Bitcoin or a fraction of a Bitcoin, a tenth of a Bitcoin, whatever it is, even down to a few Satoshis. Everyone's in it. There's got to be consensus throughout as well. So with that, you've got a system that is equitable, okay, a system that can't be corrupted, because you have to adhere to the rules of the protocol. It's accessible. Anyone in the world can just obtain some Bitcoin for themselves. You don't need to have an ID. You don't need to sort of go through applications of banks and stuff like that to see if you're eligible for this and that and the other. No, it is what it is. So you can just do it and participate in it. You can opt in. It's transparent because all the transactions, albeit they are, transparent in the sense that they're synonymous by code. That transaction is immutable, because that code can be tracked and looked at to be verified by the mempool and the blockchain itself. So everything is done is transparent. All the bitcoins that moving around to different wallets can be seen by everybody live as it happens. And transferring it from one place to another, if I wanted to ship a load of gold off to America or anywhere else, it's going to cost me a lot of money, whereas I can send all my Bitcoin to anyone in the world for pennies, because of the internet, and it could just be instantly transferred for very, very cheap. So when he says gold was disastrous for the economy, it's not the gold itself, it's people's ability to misuse that gold and be fraudulent in how that they are using it for their own benefit, and basically if impacting upon everybody else down the line, the more and more they abuse it.
Remember that once upon a time, and I use the term appropriately because this is almost like a fairy tale, once upon a time, the value of the world's currency was supposedly fixed to the value of gold, and you could supposedly swap your pound note, your dollar bill, or whatever else it might have been, for gold in a fixed exchange rate.
Yeah, that was the gold standard. So whatever gold a government or central bank had was it. That was the scale of their economy. That's what they had to work with. You could go with their little strips that they used to give you, or IOU sort of currencies, a bill, and you could technically go to the bank and say, "Oh, here's $10, here's £10," and they will give you the equivalent back in the weight of gold. And what they actually did though is all this gold. Can you imagine sitting on all that gold and you're in charge of it? You are a flawed human being, right? You have an immense amount of gold that you're looking after on behalf of the state and behalf of the people and individuals who have got the entitlement to go and redeem whatever money IOU slip they have for that gold. But you know that not everyone is coming for it all at the same time. So you start to think, how can I compete? How can I get more of this and become more influential and dominant in the marketplace? Not everyone comes at the same time to get their gold. So what if I just sort of pretended that the slips that I'm giving you and creating aren't actually equivalent to the amount of gold I've really got? I've got a few extras out there, because with that, what I could actually do is create an illusion that, I can fulfill this promise, right? I'm only issuing the notes that I've got equivalent to my gold, right? But what I do is use some of that gold to buy things that I want to enhance myself and my wealth as a institution or an individual. So I start to invest in things that I don't have the money for. I start to alter infrastructure, influence institutions to produce something, because that's the thing to do. We are so strong as an economy. Keep doing it, guys. Well done. And you're the one that's benefiting from it first, but it's going to take a while for people to realize, after they've created, under false illusions, that they're doing great. They are supplying something that is in demand. So they start up businesses. They start to, put money and invest in things themselves. And maybe it's, recognized after a amount of time that whatever stock is going up in value that the bank have already invested in first, it's time for you to now invest because it looks like a good investment. When really it's just an illusion that eventually you're going to get rug pulled after the whole thing collapses, because you thought you were doing well making the choices in the economy that you thought you were told that you were participating in. And all they've done is inflate the amount of money. And when people start to really cotton on to that fact, they're like, I'm going to go into the bank and get my gold. And that's the gold rush, right? Where people lose confidence in the trust that the banks have asked you to have on them. And when they come up and say, I want my gold, they don't have the amount of gold they have as equivalent to the amount of IOUs they have. And that's where you get the disastrous parts like the collapse of economies because of misuse of gold, not gold itself.
As a consequence, it was hoped that the number of pounds, dollars, francs, marks, and whatever else were in existence at the time would be limited by the total supply of world gold, which would therefore prevent inflation happening. This, it was said, because there was this constraint on the creation of new money, and it was claimed that it was the creation of new money that was actually the cause of inflation. The theory was wrong. It was wrong because it didn't take into account the fact that economies were growing. And growing economies, growing either by way of population growth or by way of increase of income, do require more money.
Now, this is interesting because if you start a business, that actually you wouldn't have started had you known the illusion was there, right? You wouldn't have started a business under this false demand that you see that's out there that you want to sort of take advantage of because the fractional reserve banking that was going on. So the only reason you've started that business is to monopolize or capture onto something that you can participate in and be productive in. And what he's saying is growth. The only reason there was growth is because of a lie. And that lie wouldn't have been found out. It's interesting because I can't quite work out it seems like there's a little bit of contradiction here. I need to, sorry, go back a second.
That it was the creation of new money. There was this constraint on the creation of new money, and it was claimed that it was the creation of new money that was actually the cause of inflation.
Well, of course it is. You're inflating the amount of notes that there is to gold. So that's inflation. And if you are wanting to start a business and this fraud was going on, and you go to the bank and say, I need a loan, please, for the start of my business. If they're participating in that fraud of fractional reserve banking and sort of only giving you that loan, and they're giving you that loan, or you think that you're getting that loan and that loan is backed by gold. They're giving you that loan knowing that they are already participating in something that they don't have enough gold for. So you could be giving people loans because you're going to get interest back on that loan over time. So you're double dipping. You're getting interest from the person who wants to start a business in an environment that is a false environment that you've created the demand for. You're creating inflation by giving them money that doesn't exist and then getting them to pay back the interest on. Meanwhile, investing in things that you want to invest in that may or may not fail and be, wise things to invest in. And you're creating false demand by creating more money than there is in the bank, creating businesses that are only there because you're trying to increase the profit with returns of your fractional reserve banking and propping these businesses up. And when people finally realize that you're having them on, those businesses that shouldn't exist in that environment, in a gold standard environment, will just completely fold entirely. So I don't understand what you're saying.
The theory was wrong. It was wrong because it didn't take into account the fact that economies were growing. And growing economies, growing either by way of population growth or by way of increase of income, do require more money. And they require more money because there's more income going around. And if there's more income going around, there will be more money needed to do the trades that we all wish to partake in. Restrict the amount of money that is available and try.
No, that's the problem. Creating more, increasing people's salary and the amount of people in the population, that doesn't add up. It doesn't really add up because if there's a fixed amount, a finite supply of gold, and that's the size of your economy, then that's the size of your economy. So if the industries of your region rely on resources of that land, or you've got a business that people are benefiting from that business being there and in business, they will create other competition upon that business to compete with that success, improve the efficiency, improve upon the technology that it was required to make that business better than the next competition, which therefore creates other industries and other technologies and other businesses that can participate in as the population grows and things become better over time through development of new technologies because of competition, and new industries because of new demands over time because of those new technologies, and the evolving sort of understanding of how things can be used in order to be productive. And, part of that is knowing that the amount of money that there is in circulation is finite. So you will be, just by holding on to your money, not spending it, it's going to increase its purchasing power over time. So you will have access to something later than if you were to just sort of get credit now. So it incentivizes you to save. Therefore, you will only actually be buying things that are of actual value and an actual need and demand in society. Because if you just have an infinite amount of money, you can create a business out of nothing, create something cheap and cheerful and unhelpful and polluting, and build this consumerist sort of, I want to buy this now because I know that my money's purchasing power is going to erode over time because the amount of money it keeps on printing to prop up all these businesses, and it drives prices cheaper and makes moving businesses to places where in the global south people are being sort of forced into these atrocious situations to keep up with the demand, but trying to sort of keep prices down because of the inflating money supply that's continually going up for that business to stay afloat. They're going to have to participate in all sorts of horrendous activities in order to prop up that growth that is only there because they're trying to sort of keep afloat. And that's why real estate is so expensive, because people need to put their money somewhere where they know it's going to hold its value over time. And it just becomes this unachievable thing where over time people are using real estate to store their wealth, outpricing people that need housing when that's a basic need, and housing should be at their utility value and for what they are and the quality that they are built like, etc. So sorry about the tangent.
Try and grow at the same time, and the only thing you get is deflation, which means that every pound has to be worth less to be spread more thinly across the economy to make sure that in practice there's...
If you've had fractional reserve money out there, you've printed fiat money by decree, and it isn't backed by the amount of gold you have, you're going to, once you go into that bank run, it's going to collapse everything, right? And that's the deflation he's talking about. And it's going to ruin those industries that have only been propped up by that system. So, yes, it's going to create an environment where it's going to do a lot of damage to a lot of people and a lot of harm. But if you've got a deflationary environment where that wasn't being able to be abused like the banks did, and you were unable to print more money and produce more of it, then the only incentive you've got and the only businesses in theory that should exist or will thrive are ones where there's an actual need and demand to incentivize you enough and valuable enough and good quality enough to incentivize you to part with your money that is increasing in purchasing power over time, right? And look, think about back in the 80s when I was living in my house as a kid. We had a whole bloody bookcase full of encyclopedias. It's all on my phone now, right? All those encyclopedias probably cost a fortune at one stage. Now I've got access to everything online for free. Things reduce in value as technology increases over time. The access to things today that are new and emerging are expensive. But there's so much competition upon these things in a deflationary environment where eventually these will be zero. So it's all very unusual.
There's enough currency
perception.
to go around. The trouble with deflation is when we face a deflationary situation, people stop spending because they believe that things will be cheaper in the future. As a consequence, you get an inevitable outcome, which is recession, leading to depression, and that's what we had in the 1930s. The attempt to fix the value of the US dollar to the value of gold led to the worst recession in US history, and of course that spilled over into the other major.
Like I already said, it wasn't the scarcity of gold or gold itself, it was the manipulation of the amount held and the fractional practices of fractional reserve. So Bitcoin fixes that in the sense that you don't need to trust a third party. You are Bitcoin. You are the one participating in this peer-to-peer thing. There's no need for a central bank to hold your Bitcoin on your behalf. You know, you have it in your own self-custody. That's the thing you should be doing, not just leaving it sat on the exchange you bought it from. You should be holding it yourself because that's the true value of it. You know, that will remain Bitcoin for millennia, just like gold is gold for millennia. You know, I'm the only one that has access to it, so you can't take it away from me. I can send it anywhere in the world for a fraction of, you know, a few pennies. And anyways.
Economies of the world, including ours, even though we had by then come.
Oh, and the 1930s, the sort of Great Depression thing, right? That was only because of what was going on. That's when people figured it all out after the Roaring Twenties, where people were like, "Yeah, we're doing really well," and it was a lie, and it all fell apart. And of course, it caused a lot of devastation and depression, you know. And also, let's not forget, you know, part of the contributing factor here is like World War One, and it's interesting that because when the Bank of England, like the UK, wanted the government wanted us to wanted to sell war bonds to the citizens in order to fund the war. There wasn't an appetite by people to buy those war bonds. They didn't want to go to war. So the Bank of England did a little bit of fiddling of the books and made it look like there was people buying these war bonds. But what they actually did is just create money in order to do it anyway, and then try to come back to the gold standard after the war. And that was too far gone, too much money spent, and it cost us, our livelihoods. It cost many lives. People died for a war that was only funded by fractional reserve fiat money in an environment that should be a gold standard.
I'm off the gold standard at the beginning of that decade, but without sufficient leverage of our own because of our fixed exchange rate with the US dollar at that time, we didn't have the flexibility to create the money that was required to make our economy work. And this is the whole problem for the Bitcoin enthusiast. The Bitcoin enthusiasts are saying that because there are supposedly only ever going to be 21 million Bitcoins in total.
It's not supposedly. Like, you can actually look at the open source code. You can see when Bitcoin's protocol kickstarted back in 2009, and you can look at the amount that's issued over time. That halves every 4 years. So if every block there's 50 Bitcoin, after 4 years there's going to be 25 Bitcoin per block. Then there's going to be half of that again after 4 years, and half again after that after 4 years, until eventually in the year 2140 something or other, there's going to be the last Satoshi, the 100th million part of Bitcoin ever mined. And that's projected and can't change and is in the future. And you can see the monetary policy from beginning right to end, and you know where it's going to go because it's baked into the protocol, something you can't change unless there's like a mass consensus of people wanting to change the code somehow. But there must have been really need for that. And you got to look at the block size wars back in 2017 to know what I'm talking about there, where people have got a voice in this. They know the value of it. They know and can map out what is going to happen in the future, and know that whatever they hold now is going to be more valuable over time in the future because it's becoming more scarce, more hard to come by, and more recognized as something that you can hold your wealth in as a store of value and send it across anywhere in the world whenever you like, and you don't need permission to do it. So there isn't supposedly 21 million Bitcoin. And like I said earlier, about 2% extra gold is found per year, year on year. And it's already in vaults and locked up in the Bank of England vaults and Fort Knox and stuff like that. We don't have access to it. They're just holding it for themselves. So, we might as well just sort of forget it a little bit.
In the world, there cannot be a Bitcoin inflation. That's because they say, if the number of Bitcoins is fixed, the price can't change. I do wonder about these Bitcoin enthusiasts and their relationship with reality. When they talk about Bitcoin and price stability, I wonder if they've ever noticed how rapidly the price of Bitcoin changes. In the space of a few months, its value can double sometimes, or of course halve. If that isn't an indication of instability, and of something that is useless as a hedge against inflation, I am not sure what is.
Now, Bitcoin has outperformed everything for many years. And on average, I think it's something like 29% year on year that it appreciates in value. And, 29% every year on average is pretty cool and well performing. And yeah, it has a cycle. It has a peak and a trough, and a peak and a trough. If you zoom out, you'll just see that it goes like that. So you have to weather some storms. Governments and all sorts of institutions have tried to demonize and attack Bitcoin for ever since its creation, discovery, and it survived every single one of those attacks. And it seems like the more it's attacked and the more it comes out unscathed, the more that they're just proving Bitcoin's resilience and its strength over time, and that's only going to inevitably increase recognition of that and its value at the same time. And the whole reason that Bitcoin came about in the first place was because there was a need to solve the problem of fractional reserve banking. And Bitcoin resolved that because it found a way to solve the general Byzantine's problem, the double spending problem. You can't fractionally reserve Bitcoin. Okay, you can't sort of partake in fractional reserve Bitcoin. You can't generate more of it, and it solved that problem through the algorithmic hashing and the protocol and the blockchain that's linked to every single other block ever since that blockchain started back in 2009. So, in relation to what he's saying there, yeah, bollocks, really.
But they claim otherwise because they live in, as I said before, this fairy tale world in which Bitcoin is the answer to all questions. Bitcoin cannot be the equivalent of gold. The reason why, of course, is that Bitcoin isn't the only cryptocurrency in the world. If Bitcoin runs out, then there will be other currencies to use instead. There is no limit, in fact, to the amount of crypto that we can have, and therefore, far from being a
Bitcoin came about after an email was sent on a cyberpunk's mailing list on a forum from a synonymous person or group of people calling themselves Satoshi Nakamoto, saying that here's a white paper. I think I've sort of, resolved the 30-year failed attempts prior to that, since the 70s, of attempts at creating a digitally native peer-to-peer electronic cash system. And it put in the white paper with the outline of what it is. And people developed and built upon that and sort of quickly recognized that actually, yes, this looks like it solved the problem, this protocol of what we've been trying to achieve. And Satoshi Nakamoto kept their identity out. We don't know their ideology as such. We don't know their ethnicity, their genders, or whatever. And what they did was then start the blockchain off, and they wrote in the first block that ever was mined, Chancellor on the brink of second bailout for banks. And it was a headline from the Times newspaper, and it signaled that this is something that has been brought into existence that fixes the inherent failures of fiat money and the incentives that are involved in that. And it created a movement, and it's come now to 2025 where even governments now recognizing that this thing, despite the many attacks that it suffered, actually that we just can't beat them, we need to join them. And because of that, what's happened is companies, individuals, institutions have tried to replicate Bitcoin, but they can't, because what Satoshi Nakamoto did by keeping themselves synonymous and not a person who, or people who have benefited from its creation, they haven't sort of got a business, a central point of failure. There's no pre looking after ourselves. Let's line our pockets first before we release this out into the marketplace, so we can sort of get ahead of the amount that we've got and get people to buy it, to increase our bags because we've sort of pre-bought it before it was released onto the market and stuff like that. These are just projects that are there to try to sort of compete with Bitcoin or try to profit from the properties that Bitcoin has. And people don't understand that these things have been created not only to compete with Bitcoin, but they failed at the first hurdle by the fact that it's required funding and institutions to create it. And that just completely devoids any value from it, because Bitcoin doesn't have a central point of failure. Mining is all across the globe and it's benefiting the environment, because to compete you need to find cheap or free electricity, and the only way you're going to do that is to enhance technology to the point where you're going to find natural or like technological advancements in order to make it more efficient to compete with the demand. So over time it has an actually net benefit to the environment as well, because it requires a lot of electricity to compete for the mining process of generating Bitcoin. And the more and more time that goes on, every 4 years, like I said, the amount of reward you get in a block after you've mined it is halved. So people are really trying to get hold of the last bits of Bitcoin that are out there.
Stable source of currency, it is a source of currency instability. It's even worse than that, though, because at least gold had some uses beyond being the backup to currency. There is nothing to Bitcoin. It's just an entry in a ledger which we can supposedly see.
Money should only be that. It should be money, something that you can transfer from one person to another, and that's its sole purpose, right? If you start using it for going into sort of mobile phones and stuff like that, you're actually creating other use cases and impacting on its use as a peer-to-peer thing. So, gold, yes, it does have some benefits in technology, and that's another reason, essentially, why it doesn't really meet, a good definition of money, because, people can use it for other things, and depending on the demand for it elsewhere is going to impact on the use of it as money. And Bitcoin is just that. It is what it is. One Bitcoin is one Bitcoin as one Bitcoin, and it's only there in order to transfer from one to another without double spending being an issue. And you don't trust it because it's verified by the nodes. So the protocol takes care of all that as well, and you don't need to rely on a third party for it. So,
but which we can't actually understand because it's encrypted. It is literally meaningless, worthless, empty, hollow. You keep finding the words, they all apply. Bitcoin is a myth. It doesn't exist. It is just, apparently, the answer to an arithmetic algorithm solved by a supercomputer. But it isn't actually creating value, and nor does it impart value. And if you want to understand that it has no value, just put it in relation to the real world, where it can't be used as a currency because almost nobody really accepts it as a means of payment. And when they do, they instantly translate the value of the Bitcoin that you might offer into today's value in dollars or pounds or whatever, and then accept the equivalent sum. So Bitcoin isn't money. It doesn't...
There's a saying, one Bitcoin is one Bitcoin. And that saying comes from knowing that the value that it equates to in dollar terms or pounds isn't the actual value of that Bitcoin, because it's competing against fiat currencies. And we're in a situation now where we have to daily participate in this fiat monetary environment and survive. So yeah, there are people who are getting Bitcoin, waiting for it to go up in value, taking some of that out in order to sort of get by and sort of pay for stuff in fiat. But there are businesses accepting Bitcoin as money. There's Billingsgate Market in London. There's loads of places accepting Bitcoin there, and they're recognizing that actually it's going to be good to hold this in my treasury for my business, because in the low parts of the season I can actually survive and build upon my business when it's good, and survive the winters when it's not so good. So yeah, weird.
Represent value. It isn't limited in supply. It is economically unstable. It is exceedingly price volatile. And it is claimed that the US must begin to build up Bitcoin reserves. These would be the equivalent of gold reserves. Why do the Bitcoin enthusiasts want the US to have Bitcoin reserves? Because that creates new demand for that limited supply of Bitcoin. And what happens when you have new demand for something that is supposedly in limited supply? The price goes up. So all those who currently own Bitcoin will think themselves better off. And when, as they claim, other countries will then have to follow the US and create Bitcoin reserves, the price will go up again. And this is what they're trying to create. A giant Ponzi scheme with government funding being used to increase their private wealth. I've seen dangerous.
The Ponzi scheme is fiat money. It's generating money out of thin air that's not backed by anything, calling it money, flooding the economy with something with no value that the governments and banks are benefiting from first, and then you have to pick up the scraps. And because it's inflating the money and taking away the purchasing power of your money over time, the harder you have to work, the longer you have to work, and the less you can get for it, particularly when you've got people trying to sort of hold on to that by buying assets like real estate and art and all that sort of stuff. And that the only reason these prices are becoming unachievable for people is because of fiat money. And yeah,
ideas in economics in my time. Ponzi schemes are usually the most exploitative, the most abusive, and the worst. And Bitcoin, frankly, looks exactly like that. And the marketing for this idea of the US having a Bitcoin reserve so that Bitcoin might become the reserve currency of that country and the world is probably the most dangerous thing I've ever come across. It is literally about destroying the value of the money which is necessary for the world to operate. If you want to destroy the world economy, believe in Bitcoin. If you want to believe that we actually need government-controlled and guaranteed money, which will be of value come what may, stick with fiat currency. Those are the choices. They're binary, and only one of them works, and it's not Bitcoin.
stay curious, guys.